Welcome to The Explainer. Today, we're diving into the latest from Trimble. Now, this is a name that might fly under the radar for a lot of people, but their tech is literally shaping the world around us. They just put out a really powerful quarter, and we're going to break down the strategy behind that success.
So let's start with the CEO's own words, right? Because these three words, clarity, durability, and momentum, they really give us the perfect lens to look at everything that's going on with a company this quarter. So what's the secret sauce here? What's behind all this momentum? Well, it really boils down to this core strategy they call connect and scale. And look, this isn't just some corporate buzzword. It is the engine that's actually driving their entire business forward.
To put it simply, it's all about making everything talk to each other seamlessly. Connecting the digital blueprint that's on a computer in an office to the actual heavy machinery out on a construction site. It's about creating these really smart, interconnected systems that just work. And you can see this strategy playing out on some pretty big stages. They've got a partnership with RFK Racing and NASCAR and, get this, a new one with Liverpool Football Club. And we're not just talking about a logo on a shirt. Liverpool is actually using Trimble's technology to design and build their top-tier facilities. Now that is connect and scale in the real world.
Okay, so the strategy sounds pretty slick, right? But does it actually make money? Let's get into the numbers from their third quarter, because honestly, they tell a really impressive story.
First up, the big one, revenue. They hit $901 million. That's a huge beat over what Wall Street was expecting, and it just shows you that the demand for what they're selling is incredibly strong right now. And this next number, this is the one that really gets investors excited. Their annualized recurring revenue, or ARR, shot up 15% to over $2.3 billion. This is so critical because it's predictable, it's subscription-based income, and investors absolutely love that kind of stability.
So what about the bottom line, the actual profit? Well, earnings per share came in at a strong 81 cents. That's a 16% jump from this time last year, proving that all this growth is also really profitable.
But here's what's so interesting when you dig into that revenue. A whopping 63% of it is now recurring. That shows this big shift away from just selling a piece of hardware one time. Instead, they're building these long-term subscription relationships. And that speaks directly to that whole idea of durability we heard about at the very beginning.
Okay, so we know the overall numbers look great, but where is all this growth really coming from? The real story is inside their three main business areas. You can think of them as their three big growth engines.
First up is AECO. That stands for Architecture, Engineering, Construction, and Owner-Operated. Basically, it covers the entire life cycle of a building. And man, this segment was an absolute powerhouse. Its recurring revenue grew by a massive 17%.
So how are they doing that? They're coming up with new ways to bridge that gap between the digital design and the physical worksite. Think about using 3D laser scans to create these super precise digital models. It's all about digitizing the layout to boost productivity and quality. And they're even expanding their new AI-powered tool, Project Site, into new markets around the globe.
All right, next up is field systems. The best way to think about this is like the industrial Internet of Things part of the business. All the rugged hardware and data gathering tools that are actually out there in the field doing the work. This area saw really strong revenue growth of 8%. And the examples here just perfectly show their impact. They partnered with Vermeer to automate pile drivers. They literally turned a complicated 3-person job into something a single operator can handle from a tablet. That is a gigantic leap in productivity, and it's all powered by Trimble's tech.
And finally, their transportation segment. This is the part of the business that serves the super complex world of freight and logistics. It grew its recurring revenue by a really solid 7%. And what's impressive is they're managing to do this even when the overall freight market is having a tough time.
What they're doing here is basically building an intelligent supply chain. They just launched a new freight marketplace and got a giant like Procter & Gamble to be their first big customer. They're using their huge pool of data to tackle some of the industry's biggest headaches, like empty trucks and driver turnover.
Now, with all this talk about data and automation and these intelligent systems, the big question that's on every investor's mind right now is, of course, artificial intelligence.
So here's the billion-dollar question. Could some new, nimble AI startup just pop up out of nowhere and completely disrupt Trimble's business? Well, according to their leadership, the answer is a pretty confident no. And the reasoning is actually really compelling.
See, they argue that while a startup might have a cool new algorithm, Trimble has something that's way harder to copy, this massive data moat. It's built on decades of data from millions of users, deep industry knowledge, and a global network that a new company just can't build overnight. And this is really the key point.
For Trimble, AI isn't some brand new market they have to suddenly pivot into. No, it's a powerful tool, a force multiplier for the data, the customers, and all the industry knowledge they already have. It just makes their core strengths even stronger.
So, with a strong position on AI and a fantastic quarter behind them, let's take a look at what's next. What does the road ahead look like for Trimble?
Well, first, in the short term, they're feeling pretty good. Based on how strong this quarter was, they've actually raised their financial forecast for the rest of the year, bumping up their expectations for both revenue and their profits.
But their long-term vision, that's even more ambitious. They've laid out this thing they called the 3-4-30 framework. It's a super clear set of targets for 2027. Hit $3 billion in recurring revenue, $4 billion in total revenue, and get to a 30% profit margin. It's a bold plan, and it sends a really clear signal to everyone about where they're going.
And that leaves us with one final big thought to chew on. By connecting the physical and digital worlds, and by using that massive data moat they have, Trimble isn't just trying to survive the AI revolution, they might actually be in the perfect position to lead it for all the industries that build, move, and farm our world.